After 3 p.m. on June 23rd. Thumbnail, what do we have here? Another war in the Middle East. Well, Israel, Iran, escalated tensions. U.S. decided to send some missiles over the weekend. Iran retaliates. Oil's up. Now it's down. U.S. markets up, then down, then back up again. A lot of intraday volatility to kick off the week as we're just 1 week away from ending the month and the quarter. This is what I was talking about in my Telegram. I mean, these blue lines represent the plays I did this morning on Daily Profit Play. I got to ask who's in the session today from Daily Profit Play. Are you still holding? I hope you're not, because we had some profit potential here. Ended up grabbing, let me check the numbers here, percentage wise. So 50 out of 105. Do the calculations here. We had 50 out of 105. So about a 47% winner, just over that. And then so 47% winner and a 50% winner. And I don't think it'd be good if we were still holding. So this trade is now trading for, almost $5. Yikes. This trade is now trading for 2 and change. Yikes. So glad I didn't hold it. So hopefully give me some signs of life out there, some proof of life. We're not still hanging on a Daily Profit Plays, hanging in there. We had call sides at 60.10, 60.15, put sides at 59.00 and 58.95. We had a little bit of a threat this morning as the market was a bit directional, came all the way back down to recenter. That's where I got out. Chart alarms are going off around 59.80, 58 or 59.75. Grabbed the profits that I did, but this is the type of volatility I was talking about. We opened up a little bit softer, came right up with a rip around 0.8%. From that high, ended up dropping over 1%, down 1.01, and then ripped right back up to the highs. And actually just these last 5-10 minutes got back up to fresh highs at 1.23%. That's a lot of noise for a little Monday. I don't know about you. And then you take a look at oil. Oil, gap up on the day and a big fat red candle. Oil is down over 11% today. Apparently, reason why is Iran's retaliation had no casualties. So I guess that's something to celebrate. Like, that's ridiculous. Who knows? I think as long as we stay above 65, oil continues to be volatile. If we do a quick reset, maybe this thing comes back sub 65, sub 60, then I think the market's just doing a great job of ignoring everything. And things get a little bit more probably violent and volatile in July. So I'm not sure, what everyone's thoughts are out there, but I would say that there's certainly some coiled, some tension in the markets. Let me show. Let's get into a little back test here. There we go. This looks pretty good. Pretty smooth sailing. 123 out of 128 wins. 96% win rate. One of my favorite trades. I do this a lot for my clients. I was showing this morning in one of my earlier sessions. Not too bad, especially when I can repair these trades. Not too bad at all, actually. So how often can I run these, though? That's the important thing. A lot of income. Yeah, those are good. Okay. I might play around with the expirations as well versus long and short. So had some fun with that today. Starting out this week, I had this 59.05 level that I'm still watching. Here is some gamma levels on the SPX. You can see there's still a pretty key strike around this. It's a lot quieter now, but this like 59.05, there's some gamma here, 6,000, big gamma here. I'm surprised that we're holding above it. I do wonder, if we hold above this 6,000 handle, does it just melt up into 60.50? We've had a lot of resistance there. You go back now 2 weeks of trading. Do we still have resistance around 60.50? Is this market going to be setting up? This is a clean trend line that goes back to May 7th. Because I think if we go out a little bit farther, maybe I just need to go back like all the way to the stinking 8-7 or the April 7 lows. Let me do that real quick. Let me go to the 30-minute and just connect the dots on this trend line. Let's start from the April 7 low, connect the dot there. It's like that's the issue, is we break the stupid trend line. If we connect the lows, we break the trend line. At least from this structure, this low to this low to this low, we're just kind of drifting on the right-hand side of it. I think that's the that's the resistance zone. Is if we pop back up. So I'm just gonna keep this trend line off for right now. But if we go back to this May 7 low right before that US-China trade agreement gap, connecting the dots for this low, um, I could see even a spike to the upside as pretty short-lived, and just look for a fake out. I could see this market faking everyone out, getting up to 61 and change, and then dropping pretty hard. I would be really surprised to see this gap not filled. That U.S.-China agreement gap. I mean, that's a 3 to 4% gap. You don't see a lot of those happen, especially when the gap is in the futures market, because it was like a Monday announcement. It was a 1 minute candle. It was almost impossible to trade unless you're already long. And so I think that gap gets filled. Whether we poke the upside first, right? Poke the upside and then sweep back down to the lows, maybe an ABC correction, something along those lines. Just expect more volatility. I mean, honestly, I think everyone's like, why is the market not moving that much? It's just really slow. We obviously have a lot of stuff going on geopolitically. We have back and forth with Trump and Powell, and are we replacing Powell in May of 2026? Who's going to be the new chair? Is going to be a crazy dovish chairperson. I read an interesting article this weekend about what Nixon did back in the day when you essentially aligned government and Fed, and they had the same agenda, which is super weak dollar and super weak and dovish Fed, and just crazy amounts of inflation that led. It wasn't really during the administration; it was after. So, I mean, I just, I don't, I mean, at least for Powell's stance right now is he is pushing back pretty hard on cutting rates. I know the Fed watch tool says September and December, and maybe by 25, 50 basis points they do end up cutting. But you go into U.S. 10-year yields, we're spiking, we're volatile, we're not making persistently lower yield levels. Bonds were up a little bit, but they probably faded off those highs. Let's go TLT right here. So I mean, bonds were up to around 87.30, and they faded back. They're still up on the day, but just barely. So I don't know. I've got a diagonal spread at the end of the month that's an 89 call. I'm going to continue to kind of lower this aggressively, just trying to limit my exposure or get out of bonds. If we have a safe haven bid at all and the bond gets a move up, then I want to get out of my position. I want to get out here at like 89 to $90. If I have to lower my sell strikes, that's fine. I'd like to not have to do that if we catch a bid here on TLT. Same thing is true on DXY. I think even a day like today on the dollar, which started out actually one of the stronger currency pairs. Let's do, where the heck is it? There it is. So one of the stronger currency pairs on the day was the dollar. So essentially, when the market opened at 5 p.m. Eastern time, this is FOREX. So we open at 5 p.m. Dollar and Swiss gained a little bit of strength. All the tensions. I mean, essentially, we're like, well, the U.S. just made some strikes over the weekend. Are we going to war? What's the market going to do? I fully expected a pretty decent red opening on Monday. Didn't get it. Futures are up about 0.3% this morning. Right now, looking at the tape, the markets are up. I mean, we got SPY up 0.8%, SPX up 0.7, NDX 0.95, Q's up 0.81, Dow's up 0.7, Russell up 0.81. U.S. markets like, meh, whatever, dude. So here's currency strength. Dollar and Swiss kind of in lockstep is strong until like about 7 a.m. And then around 8 a.m., dollar starts to fade pretty hard, and now it's back with all the weaklings. So Swiss remains pretty firm, pound and euro remain bid, and dollar comes back down to join everything else. So Aussie, New Zealand, yen, weakest on the day until about 6 a.m., then started to recenter and kind of bounce back here at the baseline. So, I mean, fairly violent day. I mean, we have swings on the Aussie dollar that were down in dips, and they're starting to balance back out like nothing ever happened. So a little bit of noise, a lot of noise actually. So I'm just saying that because watching the DXY move like it is today, I just don't like selling into these lows. I mean, I think if the dollar is going to come down and make fresh lows, that's fine, but I'm not selling that low. I think if anything, if and when this trend line breaks, and I'm actually just going to draw a trend line here on my DXY chart. So if this trend line breaks right here, then I think we have a short-term pop back up into the 101 to 102 handle. So does this come back down and tap the lows? Does it break the lows? Do we then put in like a little crown pattern? It works its way back up to 102 or 101 to 102. So again, I'm not selling the dollar. I'm going to wait. I think if I get a chance to If we're looking for dollar strength, maybe a dip, like a dip comes on euro dollar, that I'd be okay like buying, because I wouldn't mind shorting the dollar. I just want a better price. I'm just not going to short the dollar at lows. I'm not going to buy the euro dollar at highs. You know. All right. Let's see here. Crazy week ahead. Yeah, I mean it could be. We have end of the quarter on Monday, end of the month on Monday. So this is a week from today. We have core PCE. We do have some PMI data, I believe, this week. We have some GDP numbers, I think, this week. A little bit simpler on FOREX Factory. So PMI numbers came out this morning. So PMI in the US was positive, Eurozone, kind of as forecasted. Let's go out for the week. So mostly PMI today. Tomorrow we have Canadian CPI. We have Powell, part of a 2-day testimony. So this is in front of the House Financial Services. This is a semi-annual monetary policy report, 2 days on Tuesday, Wednesday. Does he say anything that gets into headlines in the market? I mean, we just said FOMC last week, so I don't think that this 2-day testimony is going to reveal anything he hasn't already said. That's already in the FOMC minutes, but that's around 10 a.m. Tuesday and Wednesday. I do want to be a little bit cautious on my daily profit play, knowing that Powell is making headlines. Does the market price it all in? Maybe it does. Let's look at our big levels on the day. Anyway, and the market's been so tight the last couple of weeks. I wouldn't be surprised if there is some kind of end of month volatility as we go into Thursday or to next Monday's close. GDP numbers out of the U.S. on Thursday as well. Final GDP quarterly number is still expected to be a negative print. That's negative 0.2. The previous was negative 0.2. We'll see if that's a big pop or not. And then on Friday, core PCE, that's the Fed preferred gauge. If I just do the Friday Bloomberg, this gives us the PCE headline and the core PCE headline right around 8:30 a.m. So does the market react to this at all? There's no forecast for core PCE. All I know is that the previous was 2.5. That's core PCE year over year. So is it higher or lower? Again, if this is going lower, that kind of justifies the Fed cutting rates. If this goes higher, they might want to continue to stand back and not cut rates coming in September. And then headline PCE previous is 2.1. I do want to track Trueflation, just third party really quickly. Oops, that's not what I wanted. Trueflation, sign in. Give me the data. There we go. Okay, so we're still making slightly higher highs than inflation off of the April lows. We were down here to 1.22. We are now higher at 2.14. That is 0.92% up. Now, again, this is a third-party reading. I doubt our headline CPI that we see once a month is going to reflect this, but this is showing, at least for the general theme, inflation is sticky or possibly increasing. If the U.S. government passes this tax bill for a $2.4 trillion increase in deficit over the next 10 years, I don't know how we don't have higher inflation. I really don't. Now, we might spur growth. We might have a boost. We might have a boom to the upside. We might have a melt up. I don't know, because obviously it's more spending, right? It's spending government. It's a Fed that's not raising, so it's not like it's a hawkish Fed. They're just not cutting. And I mean, all the pressure in the world to get them to cut. I think that rhymes a lot with, I think I took some screenshots here over the weekend with what happened with Nixon. Let me see here. Let me find some screenshots. There we go. Okay. So Richard Nixon and Arthur Burns, political pressure on the Fed. Nixon appointed Arthur Burns expecting support for easy monetary policy to help stimulate the economy ahead of the 1972 election. Tapes from the Nixon White House reveals intense pressure placed on Burns to lower interest rates and pump liquidity into the economy. Nixon famously said, "We'll take inflation if necessary, but we can't take unemployment." It kind of rhymes with what we're at right now. It's like we are seeing continuing jobless claims tick up a little bit. We're seeing a softer labor market. Our non-farm payroll numbers are barely over 1,000 or 100,000. If that trend continues, we're all of a sudden we're less than 100K, we're at 75K, we're at 50K. Like the progress of jobs are declining, right? And quits rates are I mean, kind of high. Continued jobless claims are starting to actually trend higher. Anyway, under this pressure, the Fed eased policy in 1971 to 72, fueling a short-term boom that helped Nixon win election. This is re-election, but also sowed the seeds for the 1970s inflation crisis. So Nixon's pressure on the Fed undermined the perception of central bank independence, a concern that persisted until reforms in the late 1970s and early 1980s. The expansionary monetary policy contributed to double-digit inflation in the later 1970s. If we truly had that now in 2020, let's say 2025 to 2030, you're talking about like a middle class, lower class, straight up crisis. Like inflation is bad enough, life is more expensive. Nobody is prepared for higher, more persistent, and even more painful inflation. This ultimately required Paul Volcker, appointed in 1979, to drastically tighten monetary policy, triggering the early 1980s recession, but restoring inflation control and Fed credibility. I think that Powell is way more of a Volcker than he is a Burns. I think that his legacy is don't stoke inflation. I don't think he has any problem, whether he talks carefully and strategically or not, he doesn't really entertain all the noise that Trump has been creating. Mr. Too Late, Mr. Loser, blah, blah, blah. The Fed's too late. They don't know. We have no inflation. Cut, cut, cut. It's not a good thing. You know, Short-term assets could go higher. Great. But man, if it comes with like just a giant bubble in the next 3 to 5 years that nobody can plan for, prepare for, only a handful that protect their wealth and manage risk accordingly. It's just going to be who cares? Like if the market goes up 20% and then drops 30%, who cares? It's like I think it'd be nice to see the market actually have a real rally for once instead of it's just got to be fueled by the government, fueled by the Fed. I mean, we're trading at 23, 24 times earnings right now. S&P, it might be actually more expensive since we're back up near these highs. We might be pushing, forward earnings at like 24, 25 times earnings. That's a lot. That's really historically high. So I don't know. I mean, year to date, the market's up maybe 1-2%. Nothing really that exciting. Taking on like a 15 to 20% drawdown to make 2%. But time will tell. Okay. So Charles is asking, do you think the U.S. evolved the Middle East tensions affect the U.S. dollar? I mean, I think the dollar's still a technical trade. I mean, at the end of the day, look, if you've been trading for, 5 years, 10 years, 20 years, this market, it's just noise. Does it really cause like a fundamental shift? I mean, I don't know. I mean, the dollar's been in a downtrend since January of this year. So we're in a 5 or 6 month downtrend. This is like one of the worst starts ever in the history of the dollar. We're oversold on multiple levels on daily, weekly timeframes. We have divergence. The sellers are probably hitting some major levels here. We've swept all these lows. I mean, I could see symmetry, and this is a high low, lower high, lower low. I could see symmetry. But if let's say that we, hit the low, maybe even find this yellow box symmetry, from there, I wouldn't be shocked to see some type of pullback. So it just gives me there's way too much. It's a way too crowded trade. The dollar to go, let's say, down here, and the risk to be kind of safely up above it, like that's not good reward to risk. So I can't sell the dollar into these lows unless it's a much tighter, much more precise entry. And I'm just not. I don't like a currency pair that gives me that right now. So I'm going to wait. So I think the dollar is likely still going to pivot. I think if we have risk off in the markets for a 2 to 3 to 4 to 6% correction, maybe even up to 10%, some type of correction, the equities market gives bonds a bid, gets the dollar to squeeze, just to kind of shake out some of this oversold condition and shake out some of this divergence. That makes sense? Which are more affected by geopolitical matters, bonds or yields? I mean, probably bonds. I think bonds right now. I mean, bonds are more sensitive. Bonds go down, yields go up. Bonds go up, yields go down. Today's a good example. Like safe haven wise, bonds are up a little bit. They started to fade. Yields were down a little bit. They started to rally. So, I mean, I think just watching the bond market, you'll get an idea. They're pretty closely correlated, like inversely correlated, right? Bonds are up, yields are down, vice versa. Dollar CAD. Yeah, dollar CAD I talked about this morning a little bit. Dollar CAD, I'm not really doing anything on this one until I'd like to see, why isn't this where's all my analysis? Featured, that's weird. There. Here's my dollar CAD. So I like the range. We're right in the middle of all this chop, so I don't really have a great trade. If the dollar CAD were to come up here and take out this high, then I think this could be this is all resistance, this is all resistance, this is all resistance. If we get above that, if we rally up above, sweep this high, pull back again, maybe this has a return to the highs. But the dollar was strong enough to make that run. The dollar pivoted hard in January. The dollar is not looking good for a bullish trade. The dollar's looking good for a squeeze. The dollar's looking good for a retracement, but I don't know how strong the dollar is going to be. So if I had my pick of how I trade the dollar CAD, it's really not participating in this midpoint that could be so noisy. For me, it's more, okay, let's say that we come back down to some major multi-year support. Then I'll look for the trade back up to the halfway point, right? If it gets further up, let your stop losses just trail. But if we can, load in at 34, 33, 32, get this thing back up to 38, I'd love that trade. Because you have a pretty clean stop loss area. I wouldn't let price really fall below like 31 or 3,000. But on the right-hand side of the trend line, that really shouldn't be the case. So I'm just going to wait for dollar CAD to line up something like that. I think this is a really messy spot right around that 38 to 3,900 zone. The dollar has bottomed out every three out of 4 years, the last 20 years. Bottomed out every 3 or 4 years over the last 20 years. Okay. I mean, the dollar's a huge basket. This was from 2016, ran from January to April, bottomed out. From May to September, bottomed out. 2016, 2020, 2024, and 5. It's close. But this also shows me that there's a lot further to go. If this is a multi-year range right here, I think this is what everyone's excited. Oh, that's dollar CAD. Never mind. What the hell am I talking about? I need to go dollar index. Sorry. Let's go dollar index. So 2016, 2020, 2022, 2025. Yeah, it's right there. But I don't have a really strong support level. I have symmetry. The really strong support that I'd say, hey, this is a no-brainer. That'd be 90. If the dollar hits 90, sure, sign me up. I'd buy the dollar at 90, right? Like that strong support level, why not? That's a great area. If we had anything lower than that, look left, and your lower levels would be probably the 85 handle. So, it's not like the dollar has to go up. I just think that technically it's due for a little bit of support, or it's due for some bounce, since we're seeing some oversold conditions and divergence, and on higher time frames. So it's right there. I just know that a lot of traders are talking about selling the dollar, and I think it's a little crowded. We all know that the retail crowd, when they all say the same thing, that's probably not a good thing, right? So again, here's the trend line I'm watching. If this trend line right here continues to hold resistance, then obviously there's no buy trade. But if we come down a little bit more, test the lows, fake out, maybe hit symmetry, and then bottom out, I could see a little bit of a squeeze happening. I just don't know what that catalyst is. Is it a drop in the stock market? Stocks go down, dollar goes up, stocks go down, bonds go up. Yes, no, maybe. Right? Like that. That's the correlation that would make the most sense. We see something where the bond market pulls, or just the stock market pulls back in July. I think if you're looking at the major cycles here, the July 18th is a big expiration. We've had a lot of nothing happening here for like 3-4 weeks now. Who puts SPX? Like, what is this? How can they even have this symbol? Get out of here. I keep typing SPX in and it goes to Spirex Group. Nobody wants to see Spirex Group. No offense to Spirex Group. Anyway, look at the weekly chart. Okay. The weekly chart so far, we have 2 weeks of indecision, and I think we're going to go into a third week. In all honesty, I don't know if this week's going to reveal anything directionally. Maybe it does, maybe it doesn't. But once we get through this week and Monday, the end of the month, and the end of the quarter, we go into a holiday week with July 3rd, July 4th. So we're getting into like a very lighter, or a much lighter, like thinner, less liquid holiday market. I want to trade somewhat cautious. I do think that summertime is also the perfect window for surprise because not a lot of people are watching. Most of Europe's on vacation. So if we have some indecision here, I think the market's capable of maybe poking those highs and all of a sudden everyone celebrates all-time highs only to maybe pull back. I would be really, really surprised if we can sustain a rally above these highs without having to pull back into some type of moving average. This 21 period moving average is not bullish to me. Okay. To me, what is bullish is let's pull back to the 50, 100, 144, 200. It's not that far away. We're talking like a single digit correction. It's maybe 4 to 6%. It could be like literally like a nasty 1 to 2 day move. It could be an ugly week where the market just drops. But if we pulled back, 3 to almost 4 to 5%, like let's just say 3 to 5%, we pull back 3 to 5%, I would happily position for bullishness. Happily. Okay. But it is harder and harder to look at this indecision at these highs with these overbought conditions, with a lot of bearish divergence, and say, I'm going to buy this. Just give the buyers a chance, man. Give the everyone that wants to see this chart, look at some technicals, buy a dip, just give us a chance. And sometimes the market does that, sometimes the market doesn't. So we'll have to wait and see. But today's price action, kind of crazy. For a Monday, this is kind of crazy. We're at 6016. If I was still holding daily profit play, I would be eating some risk right now. I would be down about $600. And that would suck. So I'm glad that I'm not, and I'm taking about 47 and 50% profit on the trades this morning. That's a lot of indecision, but ultimately the market still ended up finishing higher for the day. A lot of noise. So I actually, and in fact, I was kind of fortunate. I had a bonus trade in. Traders on my daily profit play. We did our typical daily profit play. I also put in a butterfly spread, and that 60-30 handle ended up paying out nicely. It was a 20-cent debit, closed it out for a 60-cent win. So I netted another 40 cents there per contract, which worked out pretty nice. So got lucky on the day. I do have a bonus trade if anybody's interested. You don't have to take this trade. It's okay. I got filled for 65 cents on a broken wing down here with a 57 pin. So the trade that I took, I'm out to the 7th of July. So it was an SPX trade, 7/7 expiration. I bought the 5710 put with one contract. I sold the 5700 put with two contracts. And I bought the, I want to say 50 or 5680 put with one contract. I think that's what it is. Maybe it was 75. I think I did 5675. And I grabbed 65 cents credit. Let me confirm that right now. So look at my alerts. Yep. So 5710 by 5700 by 5675 pulled in 65 cents credit. The way that trade works, I have it built out right here. So this is current price of the SPX, right around the 6,000-ish handle, like 60.15. Okay, so I have quite a bit of movement. I mean, this thing could go down quite a bit. I mean, we could go down 300 points, over 300 points now. There's still a profit trap that's not really going to pay me until the end of the cycle. So that would be like at expiration on 7/7. But the 65 cents that's right here, I just keep that as income. So I have a profit trap in case the market were to fall. I give myself a pretty good buffer. This is like a 5% buffer. So if the market were to drop all the way back down to 5,700, okay, that is about $1,000 profit trap. So we'd have to drop 5.2% in about 14 days. Like that's a pretty nasty spill if you ask me, if the market's going to dump 5%. Now coming into Monday, like with US sending missiles to Iran, hitting some nuclear sites, or escalating as and I think we had a retaliation today. Coming into futures market on Sunday, I expected everything to be red. It wasn't. Like it started red and quickly faded. We came into the U.S. Open green today, and we're still green after a bunch of noise. But anyway, it's a decent 5% buffer. Likelihood of profits, I'd say pretty high. Let me put this back into the platform here. So this trade I've got about a 94% chance of profit right now as it sits. It's well outside the expected move on the put side, about a 90 to 91% chance there. So, max profit 1060, max risk 1440, buy power 1440, 60 to 65 cents is the income side. 10 wide profit trap in case we were to drop to that level. That could be a profit trap. Every dollar is $100. So 57.09, $100, 57.08, $200, 57.07, $300. Pin price is perfect at that 5,700. That'd be $1,000. Unlikely by the time we get to expiration, but I think that some of the wild and craziness will happen through July. I wouldn't be surprised if this week, if the market is still not decided on where it's going to go. Maybe some noise here, some noise here. We're up, we're down, we're back and forth. We're going to the end of the month, end of the quarter, maybe a bunch of noise. Holiday time, who knows? I tried to price something out today. I looked at like an out of the money. If I did an out of the money bull call spread and an out of the money bear put spread, it just wasn't good. I mean, I think I had to pay like $8 to make 10. And that's if I traded both directions. The asymmetry was way more favoring the downside. You're just not really getting. I mean, by the way, if you're in my crash insurance class, my crash insurance master class, put protection is pretty cheap right now. So I have added a couple of hedges. I shared that with everyone. I did like a QQQ and SPY hedge trade for my crash insurance. It's there to the end of the year. It was dirt cheap. It's a less than $500 risk for maybe I think one of them offered like $5,000 of profit. The other one offered like $8,000 of profit. So I'm willing to sacrifice that $500 if I can make, double, triple, quadruple that. Again, if the market is going to pull back. Okay. Otherwise, may the melt up continue, I suppose. Yeah. All right. What other charts? What do you want to see? So let's look at the heat map today. almost 66% of stocks advancing. Energy is way down. Google down. Meta is up. Tesla's up. They released some robo taxis in Austin, Texas this weekend, I believe, for like a cheap fare, like $4 or something. And Tesla had a big rip today. So Tesla is up. I think it was up double digits. Tesla's up $26 today, 8%. Fading a little bit, but still, I mean, right side of the trend line. Right side of the trend line. To me, this does look like a potential head and shoulders. It's a baby left shoulder, but this could be a right shoulder. Maybe a little bit of noise. Let it settle in. But if we can base here and kind of hold this 280 support, I think if you like this 280 support, then break and go higher. I think Tesla makes a pretty good charge. It's going to take some price action confirmation to get me more excited. I'm just rolling some calls on Tesla for right now, but some of the speculation plays that I have, I mean, I'm trying to target highs again on Tesla. So I do have some shares. I bought shares down here in the 230, 240 zone. I'm hanging onto those. I put on a bunch of ratio spreads. I took actually a assignment on 2 ratio spreads. I flipped one for 7,000, flipped another one for 11,000. I'm currently still holding, trying to flip it for more. I'm just rolling it until now that this is kind of settled back in. I'm like, I'll just roll it. So I have like a 277.50 call. I'm just continuing to roll it. Out in time, lower my cost basis. I've got a 257.50 and a 260. Same thing. I know it's under current price, but I'm just going to keep rolling and rolling and rolling. Every couple of weeks, I can get usually about $2, $3 for this roll. So not too bad. Okay. Anyway, just some exciting news on Tesla. Looking at the heat map today. What else? Let's take a look at everything. I mean, broadly green, 66% advancing. Tesla up big, 8+%, leading the way. Some information technology like IBM, some legacy tech up 2.67. Accenture, interesting, that's up 3%. Fiserv up almost 4%. A lot of bright green there. ANET up 6.54. Meta up, Google down. Telecommunications, Verizon. I've got a pinch point scanner trade on that one. T-Mobile. What else? Netflix, GE up 3%. Some defense plays. Energy way, way, way down. Exxon down. Chevron down. ConocoPhillips down. A lot of those in blood red. So a little bit volatile out of the energy sector. Bank of New York Mellon, I read something they're looking at a Northern Trust merger. So that's down. Meanwhile, others are fine. PayPal coming back. These were all down last week with that stablecoin announcement. Visa way down, MasterCard way down, PayPal way down, just kind of stopping the bleeding for right now. Amex remained pretty resilient through all that news last week. That's kind of it for right now. What other charts? What other assets? You want to take a look at anything? I am kind of watching how the day-to-day unfolds. I think this market is still going to be kind of showing a lot of resistance at the 60-50 handle. If we break 60-50, this trend line is the one I'm following the closest. I'm not saying this can't be bullish. The market obviously does whatever it wants, but if this market is going to continue to hold 60-50, we have made some slightly lower lows. It's just really, really choppy in how it's behaving. So is this what it does? It just kind of rolls over, continues to show lower highs, then ultimately breaks lower? Maybe. I was going to say if we have a bit more of a squeeze to the upside, 60-50, maybe even poke slightly higher. I mean, just kind of right at the backside of this trend line, right at those all-time highs, if we see a big nasty move that takes out, any of these lows. I'm just cautious. That's all. I think this gap fill probably has to happen. I'd like to see it happen before I position a little bit more aggressively in my portfolio. So anyway, watching this price action. This week's kind of noisy. Fed or Powell speaks on Tuesday, Wednesday. We have GDP on Thursday. We have PC on Friday. I mean, today for a Monday was really really volatile for Monday. That's pretty unusual for Monday price action to give us basically 3 swings in the day. So, but it is what it is. We're trading at 60-14. I'm curious how the day closes here in about 17 minutes. I'm not in the daily profit play anymore. I got out of those for nice profits earlier, but I am curious if the if the market ends up staying below our levels. I think we started around a 10, maybe a 10 to 15 delta this morning. So not something I want to hang on to all day. It'd be down about $350 right now. So what else? Give me some charts. Give me some requests. Otherwise, I'll wrap things up here in just a little bit. Heat map for the day. Built out that broken wing if you wanted. I put that in the Pulver alerts. Inflation is showing higher levels. Let's see what PC says on Friday. Maybe Powell says something of interest this week. Maybe, maybe not. Currency strength. Swiss is on top today. Dollar was strong. Now it's not. I still think selling the dollar is. I think you're selling right into a bear trap. Just be careful. If you're tight stop losses and precision and lower time frames, then fine. Maybe scalping at best, but I wouldn't be going for a big fat push on the dollar. Flash crashes are rare in the dollar, so I think that we just have oversold conditions, divergence, and we tap those lows, maybe hit symmetry. I'd expect the dollar to maybe squeeze up a little bit. Calendar-wise, we talked about that. Some key levels here and key levels here. So, I mean, today played out really true, which I thought was interesting. We came down here. There was a nice little floor that the market behaved. So we started out, I believe intraday price action was here. Started there on the day. We went up, came down, went up. So we have resistance here and we have support here. So we found support, we found resistance. We're just holding at resistance. But intraday, little something for everybody. Charles asking about Bitcoin. Yeah, let's take a look at Bitcoin. So Bitcoin is 1027. I like this little pullback zone. I said around 98. We were close to that. I mean, I think best case scenario, if you're just perma bullish, please don't pull back. I want Bitcoin to go to the moon. Then you're kind of hoping that this plays out, where this is a rally, a little consolidation, and Bitcoin just catches a bid to the upside to all-time highs. That's going to be a much more trend-friendly, bull market-friendly move on Bitcoin. I wouldn't be terribly surprised with as much uncertainty as we have in these markets that Bitcoin maybe comes back down into this level or revisits these lows. I mean, I think the volatility has reduced quite a bit for Bitcoin, which I think is a good thing for this asset. But to me, it's I'm going to add more exposure. I'm going to add more exposure. I do think we get back to highs. I do think we make new highs. It's just a matter of, do I have a chance to add? Okay, can I add here? Can I add here? And if I like those positions, can I take profit here? I mean, I can take partial profit, let it run. It wants to run to infinity, freaking sweet, but I don't have to get super greedy. So it's either a little consolidation as the market is clearly sideways and can't really make up its mind. I would expect more volatility in the coming weeks. I think the July 18th cycle, the expiration could be pretty big with a lot of volatility to show for it. I do wonder where we're going to be here. I mean, if we pass this tax bill, does Bitcoin catch a bid because it means you're putting the fiat system into spending mode all over again, adding more to the deficit, adding to this ticking time bomb this debt bomb? Maybe Bitcoin catches a bid. Bitcoin still flows with risk assets. Bitcoin still flows with money supply. It could still catch a bid because money supply is going to be increasing, right? So I think there's actually quite a few positives. I think between gold and Bitcoin, honestly, like they're so good to have in the portfolio for 2025. I think what they represent is just a nice, safer hedge against everything fiscal, everything government, everything fiat. Gold has been treated like the asset that it is. For the last couple of years, we've been in a fantastic bull market the last couple of years in gold, and I don't think that's going to stop. I think that silver is finally playing catch up now in 2025, which is nice to see. I do have a slightly bigger position in silver than I do in gold because I can see it. I can see the technicals. I can see the all-time highs at 2011 and 20. It was 1980 and 2011 on silver. I can see those highs at 40+% higher. I mean, if gold runs 40+% higher, great. But silver, I can see that it's been there before. I'd like for it to get there again. So anyway, I think those are good ones to have. Nike, I have a couple trades on a Nike already. Mohammed, I have a ratio spread and something on my pinch point scanner. So we got a couple trades in on Nike already. So exposure that I have already is in here. Nike. I know I put on some put spreads already. So I have a naked put combo. We're trading at $61. I've got a 55.50 and 47.50 naked put combo. It's down a little bit because the stock's just been like, staying lower or just kind of in a bit of that downtrend that happened. But we got some pretty strong support on Nike right around that $60 handle. We're trading at 61 bucks. Lows from April around 52. I mean, would I be willing to take some assignment of Nike at 55? Sure, if I had to. I'm just going to set a chart alarm at the lows and see if we get there. So, but do we have earnings coming? I'm not sure. Let's hang on a second. There. So earnings, June 26th. We have earnings on Thursday. Yep. So I've got some exposure. Let's see what happens. If Nike, catches a bid, these will probably show a lot better profit. I mean, I'm down 286 bucks. So if that quickly goes back to break even, things look like they're catching a bid. 63, 64, $65. This is out to the end of the year, essentially like a leap. That's kind of how I positioned it. I also did a ratio spread. It's a 47 by 45. Willing to own some shares. I don't want to own a ton, but it's not that expensive with the accounts that I have. That if I owned, 300 to 400 shares of Nike, it's going to set me back at a break even, maybe around 50 bucks, $52, and I would just try to repair it. So if I'm in for 400 shares, end up making 50 cents to $1 on a repair, walk away with a couple $100, I'm done. Like I'm not looking to hold it long term. I'll flip it. Okay. All right. Makes sense there. Yeah. Okay. We're up to some fresh highs again. Just these last little bit. We have 10 minutes for the close. Markets are up. Just on the squeeze. On the squeeze. 59.40. I'm really surprised that just based on this big sticky gamma level at 6,000 that the market's like, we're not going to hold. So I wonder what this means for the rest of the week. Either this continues to be something where it's like we're up to 60.20 right now. We pull back to 6,000 again tomorrow. I mean, this might be here all week long. So most likely this is going to be an expiration on. It's hard to say, but I would think that this is probably the expiration for Friday and or Monday. I know Monday has a big one at 59.05, 5900, but it's not even on my radar right now. So this is my. Yeah, I mean, we're kind of running into I guess I got some negative gamma up here around 60.30, 60.35, so I could see that happening. Interesting. Yeah, we'll see. We'll see what the market decides. Anyway, back to earnings on Nike. I've got some exposure, no new trades. I'm already in some puts, a ratio spread as well. We'll see what that does on Thursday. Let's look at actually stock twits for some earnings this week. Earnings. I don't think we have a ton reporting. Any highlights here? So FedEx, CCL, I think that is Carnival Cruise Lines. CCL at 24. Okay. Micron has earnings. Nike has earnings. Walgreens has earnings. Okay. I mean, overall, it's not a ton of companies this week. The DAX, sure. This is all I see on the DAX. I mean, my way of participating is I have FEZ. Oops, let me change the color here. I have FEZ, and that's a Euro stock ETF. So for me in America, I can trade FEZ. I also have SCHY, which is a Europe and China-based ETF. So it's a non-US. You could also go the MSCI, and you want to trade this one ex-US. There's a few of those. I think I've got a screenshot in here. These have all been outperforming the U.S. Like the S&P's up maybe 1-2% for the year, and these are all in double digits. So let me see if I can find those exact charts. Gold on pace for the best year since 1979. Here we go. I think this is right. Nope, that's bond related. Bond drawdowns. Mag 7 mixed performance, it's all the stocks. International outperformance. Yes, you have MSCI XUS is by right now, it's outpacing. This is the spread between US and that non-US, 15.6. That's one of the largest spreads we've seen since, it goes way back there, like 2009. One of the biggest we've seen since 2009 and 2002. So kind of noticeable. It's like, so we're talking US essentially had like a crisis, and then Europe and everyone else outperforms. I find that kind of interesting. High valuations. That's CAPE ratio. Usually they perform like crap. Valuations are elevated. I still have price to earnings ratio on the S&P around 25 right now. I think that's just historically high. I mean, it was higher back in COVID. It was higher back in 2000, 2001 before the dot-com bubble. So historically high. All right. Anyway, so to go back to your question on the DAX, I mean, I like buying the dips on DAX. I think that we just get hopefully a pullback like 30. I would just even look at like easy numbers, 30%, 50%, even 70%. Go for the highs. You know, like if you bought it here and you're swinging to the highs, you get a 50% pullback, you're going to the highs. I think these look pretty good. You know, percentage wise, let's say we pull back 30%, we're looking at about a 7, almost 8% rally to the upside. We pull back 50%, we have a 13, almost 14% upside. I mean, that would be my plan on the DAX, is trying to get some type of pullback, some type of buyer friendly dip that looks a lot better. Okay, market's up 60.23. Wow. That is like a 1.2, 1.3% move on the lows today. 1.4%, man. 1.38, 1.39 off the lows. Can't stop the buyers. Buyers love this market. Buy every dip. Why not? Markets only go higher until they don't. That's why you just got to manage risk. You know, manage risk. Let this market be in the bull market that it is. You know, it's like it's ignoring so many things. I think there's volatility ahead. just keep your eye on the prize. I think there's fiscal spending coming our way. Inflation isn't really running rampant. I think U.S. jobs are steady and stable enough that it's not stoking like recession fears. I do think that Main Street's going to feel it a lot harder in the next 1 or 2 years, though. I mean, if this AI stuff is happening where jobs are going to be replaced and workers are displaced, we'll have a recession. I'm just wondering, I mean, how ugly would it be if we had a recession where, Main Street's losing jobs left and right? There's no manufacturing jobs for humans. There's no even like white collar jobs for humans. Like this could be like years away. But if it comes faster, what would happen if the S&P and the Nasdaq just go up like 20, 30% or more? And meanwhile, everyone's losing their job. Like I heard this on a podcast. They were talking about an old cartoon with a New Yorker, and it just showed like a guy in a suit, all tethered and worn, and it kind of looks like he's unhoused on the street. And I was like, I remember in my day, um, for a second there, we all saw like great shareholder value as like the whole world has changed and nobody works anymore. But maybe the markets are just like the best thing to be in, you know, and maybe they are. I still think through all this, it's like you be an investor, benefit from whatever built up we have. Now that we have China spending money, Eurozone spending money, U.S. is clearly spending money, trying to spend money. That power is so big, like that force is just going to melt these markets up, and I think it ends badly. But what's to stop the market from going to 6,200 or 6,300 or 6,400, hitting all-time highs with some momentum? Like we can't control that stuff. It's silly to call the top if the market's going to go to fresh highs. Why shouldn't it? Why can't it? I mean, if anything, it's like, well, it should go down, right? But it's not. But it should go. Well, it's not. Like the argument kind of stops there. It's not going down. Should it go down? Yeah, I think technically it should. But unless we have a catalyst to shake this market out, slap it around for a little bit to, give it a reality check, it doesn't want to go down. I mean, we gapped on Trump and Elon Musk fighting. We gapped on Israel and Iran. We're back up to those same highs again. The market is essentially just sideways. It just wants to keep trying to go up. I think I mean, as always, you should remember like this is a forward thinking vehicle. The pivot from the US has been so hard. It is all about growth now. We're going to pass this tax bill most likely. Trump has a majority to do it. So I'm assuming 2 point some trillion dollars gets added in. We print more money. We increase our deficits. Who gives a crap? We'll worry about it later, you know? And markets will melt up because of it. Eurozone spending, US spending, China spending, a lot of spending, a lot of repatriating dollars going, to the respective like countries and homelands. But ultimately, if the US can stay stable, resilient, the whole world can benefit from better gains. If we have a weaker dollar environment, that's good for the world too. I mean, every time the dollar gets stronger, it makes it harder for emerging countries. So anyway, that's where we're at. Closing on the day, 60.24 and change, up about 1.4% off the lows. Tail the tape net 9.6 on the S&P, 9.9 in the SPY, 9.3 on the Qs. NDX up 1.06, Dow up 0.93, Russell up 1.21. Back up again on Russell, making some, I don't know, retesting these highs from a couple weeks ago. Last week's high, the week before. It's like we're making some. Look at this freaking swing. Is this today? Good Lord. Look at this Russell. Came out swinging 1.53% to the upside. Fell 1.88%. And then rallied over 2%. That's crazy. I do wonder if this has something to do with like last Friday's OPEX cycle. I have no idea. Maybe things were like super calm. Like Friday was pretty chill last week, I thought, with like 6 point some trillion dollars in nominal expirations. But yeah, I don't know. It's a lot of volatility just for a Monday. Is there some follow through? Is there some failure? We're about to find out. Trade with stops, equity management, adjust the markets when wrong. A lot of opportunities not merited trades. I agree. I mean, it's at the end of the day, Charles, like you said, it's just risk management, man. If you can manage risk, there's upside. Like I'm in fact, I'm probably, I'm not going to say I'm overhedged because I'm not. I might have like 2 to 3% of my entire account, my entire portfolio for all my accounts here, maybe about 2 to 3% of them hedged, like total exposure, 2 to 3% hedged with upside reward of like 10 to 1, 15 to 1, 20 to 1 if I need it. So it's out there. I can sacrifice that 2 to 3%, but if we melt up higher, it's like I'm not trying to keep short in the market, right? I'm not trying to keep like calling tops. It's like just enjoy the melt up, manage risk. The upside will happen. Easy income, hopefully, right? I'm way more involved this year in just indexes, good volatility, good premium, and collecting an income repeatedly. Because like I don't know if we're in an environment right now where everything should go up. It's like the AI trade has been up, but it's AI that's sprinkled in now to energy. Like nuclear's been ripping to the upside. Speaking of, I think I've got a chart alarm set, so I'm not taking the profit yet, but I might be interested in taking some profit here on URA. This is kind of the nuclear play. If this continues to happen in the background, like honestly, I'm up $12,000. I should probably just take the profit. But if this is off and running, like this is going to be one of those types of squeezes where I think we have symmetry here and we have a completion move here. I mean, if I get lucky and this thing just rips. I mean, if there's a dip and it's bought, I like it, you know? And because I have the shares, I don't have to worry about the time. I just maybe need to put in some protection in case we fail, but we'll see. So time will tell. All right, I'll let you go for today. Happy Monday. Let's come back and do it again tomorrow. Same time, same place. Have a good day, everybody. See you soon. Thanks. Bye.